Well, hello there, everyone. Hopefully, doing outstanding today. I'm going to talk on two different topics today. First one's going to be real quick, but first of all, remember, I'm not a financial advisor. I'm not a CPA. I'm not an attorney. Nothing like that. Been outside a bit today. Had some lawn crew here trimming my palm trees and bushes, etc. Anyway, it's hot out there. Anyway, today is Saturday, August the 20th, in the year 2022. Had to glance at my calendar there. Anyway, real quick, 'cause I made that video yesterday comparing stocks to real estate. Now, one thing I forgot to say, I think, is if I was investing in stocks, I think I would probably buy a portfolio of dividend stocks, because that way I'm getting a dividend. There are stocks out there, you can develop a portfolio, we can average 4%, 5%, you can get some stocks, or some stocks. They're paying 8%, 9%, 10%. They're out there. You just gotta look. I've told you before on my channel, different names, different places to look. I'm not going to rehash all that, but there are good dividend paying stocks, quality companies. The prices have pulled back, which means the dividend yield is higher now. So if you buy when the price is lower and you're getting that dividend, as long as they're a solid company, over time, if their price does bounce back, you still get that dividend. It may go up and you get stock appreciation. Okay? Sorry, enough on stocks because I am a real estate investor. I watched a video. I used to be a stock investor, 30 some years, okay? But I watched a video this morning, one rental at a time, Michael Zuber and Stephen Dow. Stephen Dow works for Velocity Mortgage. He's a non-QM lender. All right, and they were talking about cash-back refinances. And Michael Zuber, was saying he wanted to get it put out that he doesn't think it's always good to do cash-back refinances. And Steven was saying you got to crunch your numbers. And he referenced some other investor who he said, basically in a nutshell, if you're an investor like this other guy, even if mortgage rates, because Steven said, for his refinance rates right now, they're like right around 8%, 7.99, 8%. Okay, that's high. Michael Zuber said he will not do a refinance at that because to him, a great deal is 8%. So if his great deal is making 8% and now he has to pay 8%, he's negating his great deal because he's paying too much. The interest rate plays a part in running your numbers, okay? So you got to be aware of that. Now, personally, myself, 8% to me is a poor deal. I don't play that game. I don't have the money to invest in California. I don't want to invest in California where he invests. I don't want to pay those higher prices for the real estate that he pays, and I do not want to pay that money for such a low yield. That's not what I do. He has bigger pockets than me. He made more money than I did in his career, so that's his game, not my game. My game is to find better deals, lower price deals. Maybe as I grow larger, I will get some more higher cost deals, like small apartment complexes, perhaps, but that's in the future. All right. So anyway, I am considering doing a variety of cashback refinances. Now, why would mazske do cashback refinances if rates are pushing 8%? Why? Well, I'm going to tell you why. I was looking at my spreadsheet and I tweaked some numbers to make sure they're accurate, and I will, before I ever pull the trigger on refinances, I will double check exactly what my taxes are, exactly what my insurance is, because sometimes they increase things and maybe I didn't put it on my spreadsheet already. So I want to double check everything. Double check, how much am I spending on maintenance, et cetera, et cetera, et cetera. But anyway, I'll give you a couple examples. I have one house. It's a small 2-bedroom, 1-bathroom house. Okay, it's a small house. It was renting for $600 and then $650, which was well under market value. The tenant moved out because he was going to get evicted, but he moved out, and we've done a rehab on that house. It's pretty much done. I think there might be just a little bit left to do, but it's pretty much done. And it wasn't a huge cost. It's a small house, but it was, I think, $6,000 or something. I paid to rehab $7,000 maybe. So my Fitbit was bothering me there. So anyway, it just finished rehab. It's being advertised right now. Rent was $650. It's being advertised for $1,050. Okay, it may not get that. The market has cooled down. It seems like the rental market has cooled down, at least in that part of the country. they're getting applicants, but they don't meet their standards. You gotta have standards for your tenants. Just because it's hard to find a good tenant, don't drop your standards. Okay, if it's a permanent thing, you can't find them, maybe you need to tweak your standards, but don't drop your standards just because you're not finding a tenant in a week or something. You gotta be patient. But anyway, this one house, even after the rehab, at $650 a month rent, the yield, all right, you ready for this? Remember, I said I'm not going to do an 8% yield. The yield on this house right now is showing as a 39.79%. That's with a mortgage. That's with getting rent for $650. I haven't changed the rent in there to see what the yield will be. Let me change it real quick. They're advertising at $1,050. Let's say it gets $950. All right, $950, $100 less than what they're advertising it. That puts the yield to 88.02%. So if I just improved that house, I just rehabbed it, I made it better, it should appraise higher. Even if prices pull back, it'll appraise higher than what I paid for it. My mortgage balance it's my lowest mortgage balance. It's like $25,000. So say it would appraise for $60,000, $70,000. If it will appraise that higher, $75,000, maybe I could get a mortgage for $50,000. All right, and then my mortgage would be for $50,000 at a higher. I'm paying 4.9% on an original balance of like $27,000 or something. And maybe now my balance is $50,000, I'm paying 8%. Okay, so my cash flow would drop. But if I'm yielding 88% right now, I got a long ways I can fall. And so I'd still be safe. All right, so moving on, I got another house. Let me see if this is one that's been rehabbed. This one hasn't been rehabbed yet. It's yielding currently 36.75%. It won't be rehabbed for a while. The tenants are still in there. The rent is under market value, so I got that one. I won't refinance anything until it's been rehabbed. All right, I got another one. Let's see which one this is. This one has been rehabbed, so it's at market rent right now. It's being rented for $950 a month. I think it's a 3 bedroom, 1 bathroom. My current yield, and that's counting my rehab money. My current yield is 60%. 60%. So that one, I may refinance that one. It's been refinanced. The rent's higher. I'd run the numbers. Try to get it, before I do it, before I do it, I got to try to come up with what I think it will appraise at, and I could be wrong. Run the numbers on that, make sure I qualify for a mortgage, because the mortgage company I'll use, Kiavi probably, has a minimum mortgage of $50,000. All right, so as long as it will appraise high enough where 75% is $50,000 or so, I'm good. But again, it's at 60. The return is 60%. So I have some room to play with there. I got another one. Let's see what this one is. All right, this one has not been rehabbed. The rent right now is $850. It's under market value because the tenant's been there for a couple of years. So they're incrementally raising it each year like $50. Market value right now, I think, is around $1,000, $1,050 for that house. And if it's rehabbed, it'll be even nicer. But the return on that one is 48%. Okay, right now. So the point I'm making with this is a counter, because I know some of you that watch my videos might watch one rental at a time. And you'll hear what he's saying about be cautious. But if you listen to what he says, his deals are 8%. He's not going to refinance at 8% because he's very clear in saying that. Stephen Dow was very clear in saying, it's my name Don. I think he also said the name Will. But he referenced Don Moore. He said he's not going to give away his market. But he said Dom is finding some killer deals, buying some great deals. And he goes, I'm not going to tell you where his fishing hole is, but even at 8%, they're great deals. So if he can build his portfolio now as prices pull back just a bit, as we come out of whatever we're going into, he's going to be great. He's going to be fine. I've told you on my channel where I'm buying at. You probably can't find deals just like I'm finding just yet. Let me see something real quick here. Okay, but they're out there. They're out there. They're out there. All right. And again, I will not refinance anything that is not already cash flowing well, yielding well. So, but I will, even at 8% interest, I will still potentially do cashback refinances. All right. So, if you're a real estate investor, there's a lot of variations for all of us real estate investors. We buy in different markets. We live in different parts of the country. Some of us have deeper pockets than other people have. So we can afford more expensive properties. Some of us are buying lower priced properties. Some of us are buying multifamily. Some buy single family homes. Okay, there's a lot of differences. So we'll see. But me personally, if I do these cashback refinances, as I get a little pile of cash, I may buy more real estate, but I'm also an alternative investor. I'm investing in mineral rights acreage and oil drilling. I may put some of my money into that field because for me, I like it. I like the returns. I like the non-volatility of having to pay for rehabs and find new tenants and that sort of thing. It's just consistent returns. So I like that. So we'll see. And then over time, because the oil market will change over time, but it has a long run ahead of it. No matter what you may hear in the media or what you may think, there's a long run ahead of it, years, decades perhaps. But if I'm still alive and the day comes when that's a poor investment, I will be pulling money out, hopefully before that happens, and perhaps putting it into real estate at that time. But at the same time, even though I might grow the alternative investments, I'm still going to add to my rental portfolio. Okay? We'll see. You know what my goal is? $25,000 a month. I will get there. Okay? So, and if I can do it, as I always say, if I can do it, so can you. So can each one of you. Don't make an excuse. Look in the mirror. That's the only person to point the finger at, that person in the mirror. All right? So don't make any other excuses. I was going to talk on another topic. I'll talk on that tomorrow. So hopefully I got a busy day tomorrow too. So y'all take care. Stay safe in all you do. And Mazske is signing out.